little change, a blip up, a blip down, but essentially the market does appear over the last three trading sessions in August, the first three trading sessions in August, to be on a slightly downward trend this week, with the Delta variant sort of putting wind in the sails of the glass half full sentiment. Let's kick off with Rustin Edwards, head of fuel oil procurement at Euronav, sitting in Geneva. Rustin, we've certainly seen the Delta, do its damage increasingly. If not in the West, at least, ending up in a lot of hospitalizations yet, it's certainly doing enough to curtail economic activity. Have we seen its impact yet in shipping, trade, etc.?
Well, the impact has been here. Since the whole breakout. I mean, forward freight rates on tankers has been pretty poor. So the oil demand is not there, or the oil supply is not there to warrant more usage of tanker freight. Therefore, tankers sit idle looking for cargoes, competing for cargoes rather aggressively. When you look at from the dry bulk side and on the container side, we've had the port delays that continue to keep rolling on and on and on. A lot of the port delays are now being attributed to some of the weather, but there's still manpower issues in a lot of these ports. I mean, China, yesterday I was reading 12 major cities and import hubs have all been put into some sort of lockdown due to COVID outbreaks in those areas as they're trying to contain the Delta variant. And those impacts seem to roll forward. So there's a lot of warnings being put out now from different shippers about their ability to meet their supply needs going into Q4 and into the Christmas holiday season. So it is going to be a rather impactful event to the shipping market still. And if we get more lockdowns, it's going to be people are going to be ordering from home, and that's just going to keep expounding on that whole issue.
Let's go to Richard Redoglia, Chief Executive Officer of Matrix Global Holdings in California. Richard, we've seen clearly the data trickle in that there is an impact in China and growing in Southeast Asia from the Delta variant. Of course, they're very sensitive to any infection there, so they go into severe lockdowns when it happens. Where in the West, we're coexisting with higher infection rates because of the higher vaccine rate. Is there any chance that that could shift in the US? We're already seeing mask mandates return. Could we see more protocols reintroduced that might curtail economic activity?
I think it's very possible. We're seeing in many cities, they're all different. Every state is a different country here in the United States, as you know. Even the cities are different. So we are seeing mandates put in place. We are seeing hospitals filling up. But what we're not seeing are people coming off the roads. Airports are full. Planes are full. I was saying earlier to the gentleman that flights have not been put back into, all the flights not put back as many as they canceled. And so we're seeing a tremendous amount of economic activity. So from a demand perspective, there might be some effect, but I think this goes back to something we've been talking about for a number of months now. How much does it matter? Does it, seeing a slight decline in the demand by the variant I think is probably in the best interest of OPEC. It allows them to manage supply. I just looked at a couple numbers. I was on a few weeks ago saying when the market collapsed, I thought that was probably the best thing for the market to do was to collapse, to get people, get longs to take profits and people who want to be bearish to be short, and they paid the price. Right now, the Brent market is $11 above the 200-day moving average. And the 50-day average is $12 above the 200-day moving average. So this market's in still a relatively strong uptrend. It's not overbought. The crude remains in backwardation. And if there's any bearishness, it probably comes in the jet market. But overall, whatever these different effects we're seeing from the Delta variant and the effects on demand, I think are transitory.
Perhaps, Richard, it also gives some support to the Fed position of maintaining their easing policy, even in the face of such economic strength. As you've said, in the US, the Fed position was starting to look nearly untenable. This might give it a bit of a longer lifeline.
The Fed position is untenable, full stop. Whatever I think we can go on along about what the Fed is doing. This is just the Fed will do what the Fed's going to do, and I think they have no choice. Our unemployment rate has gone down. Our economic policy for unemployment has been somewhat misguided, and the Fed is going to keep interest rates down because they have to keep interest rates down. The effect on demand, I think, is again minimal as far as what the Fed is going to do.
Let's go to Frank Kane, senior business columnist at Arab News, the largest English language newspaper in Saudi Arabia. Frank, we have a big story obviously brewing in the region the last few days, and that is the tensions between Iran and Israel / the US / the UK. I'm not sure how many other countries are on that list, but ultimately what has been a tit for tat tanker attacks over the last 2 years or more really seems to be escalating. What's your sense of where this story is going and the escalation of it, if you like?
Well, there's certainly lots of concern about it, Sean. Both here in the UAE, where you and I are, and in Saudi Arabia, where I'm working and talking to people there. The latest seems to be that one of those ships has been abandoned by the people who took it over, the asphalt ship. They seem to have left, according to the front page of Arab News today. But it will continue, won't it? And exactly who these people are, we're not sure. Are they revolutionary guards acting directly from Tehran? Are they Houthi militants acting under Tehran's auspices? We really aren't sure, but it's becoming more of a global problem, isn't it, rather than a regional one? We had the British.
Well, it's certainly been articulated in that way. I mean, this U.S. Secretary of State Blinken, I thought, was very quick to, as compared to previous episodes of this, to assign responsibility to Iran. Usually there's that sort of gap of deniability, but they were very quick to put the tag right on Tehran.
Yeah. Although whether that covers Houthi militias too, I'm not sure. Maybe it does, but it certainly is becoming global. I'm sure the U.S. Navy is carefully monitoring the situation. The British are directly involved. Israel must be involved somewhere along the line as well.
Well, Israel has said that they will act unilaterally if the world or if the international do not, and that's always their posture of threat.
Yeah, against Iran for sure. Saudi Arabia has actually been quite muted on this so far. They have acknowledged that these incidents took place and they're watching them, but there has been no direct apportioning of blame to Tehran, as is often the case. They're often very, very quick to do that. So they've held back a bit there. I go back a couple of weeks to when we were hearing about peace feelers going out between Riyadh and Tehran, and we haven't heard that for a while, but I'm wondering whether those conversations are going on quietly somewhere, and Saudi wants to, really row back from a direct confrontational stance with Iran on these issues, on these maritime issues.
Well, it's hard to see who wins if this does continue to escalate, Rustin, perhaps other than the insurance companies that are insuring that lovely ship behind you. Are we seeing any consequence yet, any trickle into the shipping markets from this incident in the Gulf as it escalates into this uncertain space?
I haven't seen anything yet pop in. There has been an escalation in the war premium insurance risk since 2019 when the Limpet mine attack started. That has been priced into the freight rates, but nothing yet from this current recent activity there. And it's probably not going to impact rates much more than what has already been added, because it's just kind of a continuation of the same risk, that there is some player in the market there who is doing things that is not conducive to the safe operation of vessels in the region.
And from the point of view, Rustin, of the Iran nuclear agreement or the rapprochement, the talks in Vienna that were held for 2 months in April or May and June, it's hard to see them restarting under this sort of cloud, and hence the new oil supply from Iran very unlikely this year.
Well, there is a bit where I was reading last night where the Biden administration has tried to keep the extracurricular activity out of the context of the negotiations in Vienna. Will this recent development, and also remember yesterday was also the inauguration of the new Iranian president, who obviously has a much more hardline stance than the prior president. And so is that going to change the dynamic? It may change it a bit. It may delay it, but we have to see how the other parties of the JCPOA respond to that as well. If you get everybody else on board on the same side of the negotiating table, that hey, Iran, you have to stop all this, or you have to stop supporting these activities. Otherwise, you don't come back to the market. We'll see what happens. But at this moment in time, I don't think it's going to be. I think they're supposed to restart negotiations in 4 days in Vienna on the 8th.
Well, the two voices you never hear at moments like this is Russia and China. And of course, they are very critical at those negotiations and in any direction as to where this may go. Iranian oil, as we know, has been moving into Iran. Richard, just going back to the fundamentals that have sort of underpinned this market all year has been the consistent decline in U.S. oil inventories. Again, we had the API report out yesterday, and crude oil and distillate inventories fell once again, which is, of course, a continuous support to the market, even as we see the sort of bearish sentiments from the Delta variant.
Yeah, it's going to continue. I think we've kind of gone through this before. The demand is on the increase. Supply is being limited. The U.S. oil production is trying to go a little bit higher, but it's really a function of the ducts, right? The wells have been completed, and little by little they're coming back online. It's not some huge investment that's going on. It's causing shale to come back on and to take advantage of the higher price. Again, we're back up near the highs. We're seeing what we'd expect to see, and that is people in their cars driving. And there is no commensurate increase in any kind of production. I think one of the most important things we're about to see here, and I'll make the statement, maybe it'll be true or not, but I've talked before about how I think that OPEC Plus is in the driver's seat like we've never seen before. The fact that we have a bombing in the Persian Gulf on a ship kind of adds some historical play to the equation as well, to add some price risk there. But I think one of the things we might be looking to see here, and that is, as we see demand staying relatively steady, is OPEC going to adjust its 400,000 barrel production number? And that's something that I think that will be really the signal to watch. If the Delta variant, if we start to see U.S. demand falter, for example, are we going to see a situation where OPEC does a hiccup and has one of these surprise meetings and they drop their 400,000 barrel production number down to 300,000 increase? That I think will be the real test. And that to me will be a signal of something we've talked about for a while, which is them being in total control.
Frank, your thoughts on that question and generally the aftermath of the OPEC, the extended OPEC Plus meeting last month, which obviously in the middle of it had a disagreement between Saudi and the UAE. Your thoughts on the resolution of that? Is that solid now, locked in, and the outlook for tweaking going forward?
I think it's pretty solid, probably up until December, when they have the next big round. And at some stage, we're also promised a forum regarding resetting the baselines, aren't we? To have a long-term solution to that. But the formula that they've reached looks pretty set in stone until December, and then through to 2022, the end of 2022, which is when the agreement runs out. So will they change the terms? Will they cut to 300,000? I don't think that's on the cards immediately, but it could change, of course. All is peace and light again, isn't it? In the Saudi-Riyadh relationship. The two ministers sat at the media conference after the OPEC Plus meeting, and they said great things about each other. And you have to think that they have buried the hatchet, but longer term, there are bigger forces at play, aren't there, dragging the two of them apart? Not necessarily only in oil, But in terms of competition for business in the region, we've seen Saudi Arabia pretty aggressive on a couple of things recently. The move to get regional headquarters in Riyadh, for example, the imposition of new customs rates on free zone companies, which was interpreted as a move against Dubai in particular and the UAE in general. So that there is only so much global business going around, and both Saudi Arabia and the UAE are both trying to get hold of this. So,
and of course, the other part of this equation, just addressing Richard's point, is that come next month, the Gulf at least is expected to get back to in-person business with conferences and gatherings, including the OPEC 60th birthday in Baghdad, which will, unlike the last 6 or 12 months, present endless opportunities for the media to engage with these policymakers, which in the past 12 months they've not been able to do. Frank, your thoughts on whether all of these meetings will go ahead in the Gulf post, conference, already only weeks away now. The Gas Tech, one of the world's biggest gas conference exhibitions, due in Dubai mid-September. Are we going to see all of these things happen, do you think?
There was a very positive announcement from Dubai yesterday, wasn't there, saying that, and it reeled off a whole stack of conferences. I'm not sure whether Gas Tech was one of them. The African Petroleum Forum was one, which will take place here in Dubai, usually in South Africa, but moved to Dubai because of COVID. Whether they all happened, 100% face-to-face is still to be resolved, I guess. There is always the hybrid formula to fall back on. I know that Saudi Arabia is looking for a Big Bang FII conference in October in Riyadh, the old Davos in the desert. They're looking to do that with a flourish later in the year. So, some will happen. I guess some will be scaled back again, Sean, won't they?
Well, it certainly will be interesting from the sense of momentum and from the Gulf perspective. Rustin, we're seeing a number of different potential stimulus still out there, the infrastructure bill in the US being one of them, the potential for others, however, to wind down. In Europe, a number of programs that governments have put in place to support redundant companies and furloughed employees. So we're going to see a sort of a macro impact over the coming period. How do you think that plays out at this sensitive time of the Delta variant disrupting economic recovery? You're on mute, sorry.
That phrase will never go away. You're on mute.
Yeah, I know. It's like the T-shirt, right?
That's a good one.
I'd like to get that printed out and sold.
I was going to say, patent that one, Sean. That's you got that one.
I think there's a big meeting today with the UK central bank where they're going to discuss the stimulus that they've been putting in place there. I mean, it is a very tricky situation because you still have, here in Europe, a lot of vaccine hesitancy, which is impacting a lot of business. There was a survey out in the UK where 40% of the people said they don't look at traveling internationally for holidays anytime soon, or still having issues around the whole hospitality side of consumption, where going to parties, restaurants, concerts, what have you, a lot of reluctance still of the population to go out and enjoy those parts of life. So it is, I think it'd be hard for governments to pull back all the stimulus. I think they have to keep some of the stimulus in place because the hospitality tourism sector is a fairly large chunk of a lot of countries' GDPs. When you look at it from a percentage basis of how many people are employed in those sectors, how many people utilize that sector. So even with the transportation numbers showing where they're at, that reluctance to go and travel and do things on a long distance thing is really still going to keep the impetus to have some support mechanism still in place, because we're not out of the woods. We're probably in the middle of the forest and we just don't realize it yet. when it
My
comes
wife and kids arrived into Malaga yesterday, one of the biggest tourist airports in the world, probably in August. They were the only flight, the only people in the airport, which is just anecdotal. Maybe it was just that hour, but having arrived in that airport many times in the past, it is a zoo usually in August. And so that's some indicator. Richard, Mike Muller on our program on Sunday made a particularly interesting note, in my opinion, that sort of just went by the way. And that was that most models still have built in the fact that Iranian barrels are coming back in the fourth quarter. The IEA still has built into its model that the 6 million barrels a day of demand recovery this year. The World Bank is still telling us the world economy is going to grow by 5.6% this year. My point ultimately is all of these models on which so many things are built seem to be a little bit outdated at the moment, and will have to be adjusted.
Well, this is the point I just made earlier. I think this is the point. I think that we're talking about. We've talked about before. We've never in history have supply demand been able to be calculated so perfectly. We've never had. We can go back. If we go back just 5 years, we did not have the demand function calculated like it is right now. We've got Kepler, we've got Genscape, we've got every airport in the world, we've got individual carts. Your anecdotal story about airplane and jet fuel is the weak link here. So we're looking at demand in real time all the time. OPEC is meeting in real time all the time. That is the first, in my mind, a confluence of these two things happening. And I think what it causes a reduction in forward volatility. So you get a curve that kind of creeps higher and stays stuck in the middle. When that kind of move happens and you put further backwardation, you tend to not allow forward hedging to be so aggressive, because why sell forward when the market's $9 cheaper? And so what you said, I think, is important, which is why I made the point. Is the Fed going to be like Paul Volcker? Are they or really more like Bernanke? Are they going to tweak it? Is OPEC going to adjust it? And I think this is probably the most important thing that we can be looking for. Now, I don't have the answer for it. I'm just making the statement. But what you just said is, if the market gets it wrong and demand does falter, I would not be surprised that OPEC decides to adjust production. If it doesn't, it doesn't. But I do think this is the new.
They were rather low ball at 400,000. The market did.
I agree. They wouldn't do it. I think it's not the number that matters. It's the ability that they can do it.
Right.
We've already seen it happen in February. Saudis came out and said, we're taking 1 million barrels out of the picture. That no one saw that, right? To me, the MPZ kerfuffle was, what do I know? I'm sitting in San Diego, California. To me, it seemed like smoke and mirrors. It seemed like a great story to tell everybody, to get some people to get bearish, which did exactly what it did. It caused the market to collapse. It caused the longs to get out. It caused people to get short. And what happened 6 weeks later? We're right back up again. So I really believe that what you said is exactly right. These forecasts and this information that we're seeing, we're in a world where information moves at the speed of light. And now it's moving at the speed of an OPEC Zoom meeting.
And yet we're still reliant on structures like the IEA and the World Bank who don't move at the speed of light. Let's go to the survey question.
Are we, Sean? Well, are we?
I think a lot of models still are. Fresh outbreaks of the Delta coronavirus variant in Southeast Asia have crippled its factory sector. We're talking about the Philippines, Vietnam, very big countries in Southeast Asia now struggling with the Delta variant and very low vaccine rates. There's a tsunami in place there. Will Delta compel the World Bank to revise down its forecast of 5.6% global growth in 2021? And not just because of Southeast Asia, but across the world, Delta variant is compelling all sorts of countries to, even in the US Senate, they can't vote on the infrastructure bill in time ahead of the recess of the Senate because a number of senators are isolating due to infections. Not getting sick. This isn't about getting sick or hospitalizations. This is just about COVID disruptions in terms of isolation protocols. So I welcome your views on that. Ultimately, Frank, my point is that one of the big shoes that might drop in the coming weeks, and certainly coming out of the summer season, is the adjustment of the variety of forecast models that we rely on, the World Bank, the IEA, OPEC, and others, given what's changed over the last 6-8 weeks and what will continue to change. That adjustment by these structural outlooks might have an impact of its own. Your thoughts on that?
As regards the oil market, certainly. Look, Prince Abdulaziz bin Salman, the Saudi energy minister, has been noted for his caution in this respect, and he seems to react, to any change in the macroeconomic outlook, doesn't he? So, what Richard was saying about the possibility of some sort of trimming of the strategy before December, that I guess that is possible, and they have done it before. But speaking from Saudi Arabia point of view here, that most of the indicators have been going the right way. Recently, the IMF came out with a very bullish outlook for Saudi for the rest of the year. The ratings agencies have been marking them back up, making them stable rather than negative.
And on that point, the adjustment of the fiscal position of the Gulf states, Frank, obviously oil prices go up, everybody makes more money. It's not complicated. But there was a program underway in which the Gulf states were borrowing a lot of money. They were going aggressively into the debt markets. Will that slow down now that the fact that the fiscal coffers are fuller from oil revenue, or will they continue to think with those debt programs?
They have borrowed quite a lot, haven't they, already this year, but they can still go back to those markets. They are still open to them. They got very good terms and raised big amounts earlier in the year when they did it. One thing that you should note, Sean, which gives you some indication, on Sunday, Saudi Aramco announces first half figures for the year, and those will be booming because, of course, oil output has been going up and price has been going up too. So, there will be a massive turnaround from the same period last year. And some of the people I've been talking to about this are even discussing the possibility of a special dividend from Saudi Aramco, i.e. a bigger dividend in line with the other international
oil majors.
Yeah, exactly. So, that could be something to watch out for, and that gives you an indication, I think, of the state of health of the Saudi economy anyway.
Rustin, we're halfway through this week, the first week of August, the sort of peak holiday season, if you like, and typically in the West, oil prices have migrated towards the 70 rather than towards 80, which looked possible only last week. Your thoughts on what gives this market direction, or does it wander in August while we're all away off the screens?
Well, as you just pointed out, we're coming to the end of holiday season. Schools start picking back up in mid-August, and that curtails any family vacations. And so, we should start seeing gasoline demand start trickling off as we get out. We've already sort of seen that in the United States. We have the highest demand figures at post July 4th. Then after July 4th, demand has basically been flat. So there hasn't been any additional demand growth there, and they're driving. The European demand for driving is relatively robust versus jet travel, because that seems to be the mode of transportation everybody is taking at the moment. So that's going to keep supporting the refining margin here in the short term. But in the long term, that gasoline margin is going to come off going into the second half of the quarter and into Q4, as it seasonally does anyway. So it is going to be a kind of a drag on the demand profile as we go forward. I think that as we, as we look forward, as the Delta variant keeps picking up, I kind of agree with Richard that if Delta keeps impacting China and China demand starts to drop off, I think OPEC will react. They can't put 400,000 barrels a day into the market and have China not there to buy oil because people are locked down. I mean, you start locking down significant portions of that population, that's a direct impact to the refining system. We're already seeing that impact in some other markets that China's involved in. I believe there's an issue around coal and coal loadings into China, as their demand profile is not looking that good as well. So there is a bit of a an impact that probably will happen. We'll see it as we get into August, and how bad does Delta impact Far East demand for petroleum?
Well, let's get the survey result to give Richard the last word. I would note, oh wow, by a big sort of 4-1, will Delta compel World Bank to revise down its forecast? 4-1, yes. The other thing that Mike Muller said on Sunday of note, I think, was the fact that he expects China to continue to draw down from its strategic petroleum reserves up to 30 million barrels in the fourth quarter. That is a significant piece. Richard, your outlook going forward, we're obviously not going to have, we're going to be off for a few weeks. Welcome your sort of over the horizon view for August into the start of the new season, if you like. Is the US going to pass its infrastructure bill? Is it going to continue to come out and continue to be powerful?
I think what is our Congress going to do? If they should just go on vacation and do nothing. I'm not sure you're aware there's another reconciliation bill that they want to pass, in another $3.5 trillion, 3 times larger than their infrastructure bill they want to pass on top of this, which might make them all go away. So I don't think it really matters. They don't spend the money anyway. If they do spend the money, it doesn't necessarily go into oil demand. I think what's interesting about that poll there, and I think what you said, something that Mike Muller was saying, and I don't. This is a question. It's really for everybody. We look at with these large, the IEA and all these large analysts are looking at markets. Aren't the supercomputers doing all this now? Aren't the big oil trading companies have all these things already running in real time? Aren't we watching the way the market is calculating things instantaneously? In my mind, I don't know that to be the answer. I tend to believe it's the case. When I look at how trading goes in the US and I see how things trade with high frequency, I tend to believe that that big data is exactly that. It's big data, and it's being accumulated all the time, and it's making calculations all the time in real time. And so I think we're in for sideways price action. Probably a 60, the low we made just recently with a high probably around 80, and we'll stay that way until OPEC tells us which way they want it to go. Frank made a good point. If Saudi Arabia gets to increase their dividend, that's a pretty kind of cool thing to be doing. That gives them a lot of cachet in the world of finance if they do something like that. So I tend to think we're trending sideways to higher, and we'll know more when OPEC tells us what they're going to do.
Well, let's wrap it up there. I think it was also note, as I mentioned earlier, about the adjustments of these structural outlooks, IEA, World Bank, and so forth. There's also going to be the structural adjustments, I think, to COVID, coexisting with COVID protocol, like we saw in the UK last week, where they reduced this sort of contact tracing from 5 days to 2 days, so that if you were in the proximity of an infected person over 5 days, that everybody had to go home. Now it's just 2 days. All of these incremental adjustments to coexist with COVID, I think, will be one to watch out for over the coming weeks and months as we sort of find what is the status quo with Delta. But nonetheless, thank you, Richard. Thank you, Rustin, and thank you, Frank, for your time and insights today. Tomorrow, Thursday, we'll have our last show of the week, and then we will take a break for a few weeks so that everybody can do hopefully go on that nice ship and put a sail on it, Rustin, and pretend it's a sailboat. But nonetheless, thank you all. We'll catch up with you tomorrow.
Thanks, Sean.
Cheers.
Thanks, guys. Cheers.